Welcome, dear traders. It's me, Kate Stichin, and you are watching a recap of the Asian session on April 25. Asian stock markets remained flat. However, Japanese shares closed with gains yesterday. This morning, they rose again, moving against the overall trend. Geopolitical tensions may slow down China's economic revival, which is bearish for stocks. Investors are also cautious ahead of the Bank of Japan meeting. Market participants are now skeptical about a quick recovery of the Chinese economy after the pre-launched lockdown. The yuan has been declining against the euro for some time. The Hong Kong Monetary Authority is struggling with the growing pressure on its financial system and the national currency. At a first glance, China's economy is steadily resuming momentum. Some economic indicators looked the best performance in 17 years, and many investment banks are optimistic about China's economic expansion. However, geopolitical risks, namely Taiwan relations with the United States, cyber warfare, etc., may hinder its revival. On Monday, the Foreign Ministry said that China respects the status of former Soviet member states as sovereign nations. It distanced itself from comments by its envoy to Paris that led to an uproar among European capitals. The yuan fell to a 19-month low against the euro yesterday. Meanwhile, the Hong Kong Monetary Authority may intervene in the foreign exchange market to support its currency. Last Wednesday, the Hong Kong Monetary Authorities brought 6.9 billion Hong Kong dollars to prevent the Hong Kong dollar from breaking through the weak end of its trading band at 7.85 per US dollar. However, the Hong Kong Monetary Authorities aggregate balance slumped below 50 billion Hong Kong dollars and the lowest level since 2008. South Korea's export-oriented economy narrowly escaped a recession, showing little growth in the first quarter. Its GDP grew by 0.3% in the first quarter compared to the previous 3 months period. However, economists believe that this was a technical rebound after a 0.4% contraction in the last quarter of 2022. It was also the first decline in 2.5 years. Such figures renewed hopes that the central bank's tightening cycle might be over. The Bank of Korea is widely expected to take a pause after raising rates by 300 basis points since the end of 2021. On a Tuesday morning, the dollar-yen pair showed a mixed dynamic. The yen dropped again against the US dollar, but later managed to rebound. At the time of making material for this video, the pair was trading at 134.10 or 0.06% higher. It was moving in the range of 134 and 134.50. Speculators are all unlikely to open new positions before the Bank of Japan meeting. Kazuo Ueda stressed the need to keep monetary policy ultra-loose for now. However, he signaled the chance of raising interest rates if inflation and wage growth overshot expectations. The next Bank of Japan meeting will be the first chaired by the new governor. Japan raised its official assessment of imports for the first time in 9 months as a sharp drop in the yen compared to last year led to a surge in the cost of imported goods. In the monthly economic report, the government noted a moderate recovery. However, it also recognized rising bankruptcies. It maintained a warning against global financial volatility in response to Western bank collapses. The government also pointed out that bankruptcies are growing in the country, although earlier it stressed that they were staying at low levels. Data by credit research firms showed 809 bankruptcies filed in March in Japan, up 40% from the previous month, the highest level since June 2015. The US dollar also failed to climb in the Asian session as traders factored in an early policy reversal due to the banking sector woes. It showed moderate growth, or rather a rebound from the previous lows. At the time of making this video, it consolidated near 101.49, notching an increase of 0.15%. Its trajectory for today is rather mixed. Investors are sure that the Fed will raise the key rate by 25 basis points in May. However, the question is whether it will abandon an aggressive stance after this. Investors were rather worried about a sharp fall in the First Republic Bank shares after the closing bell on Monday. It once again reminded traders that the banking crisis is not over yet. This is why they again expect the Fed to cut rates in the near future. Fed funds futures speculators are pricing in an 88% probability the Fed will hike rates by 25 basis points at its May meeting. After that, the regulator could cut the key rate by about 50 basis points at the end of the year. The US dollar index sank 2.4% overnight and reached a 10-day low of 101.19 in the early Asian trading. However, it managed to recover later. The Australian dollar kicked off on Tuesday with a fall. It lost 0.5% and dipped to 0.6659. Trading floors in Australia are closed today. Despite a decrease at the start of the week, the situation may change dramatically on Wednesday. The inflation data in Australia could give a boost to the Aussie. Inflation is projected to drop to 6.9 from a 7.8%. If the region undershoots forecast, fears about an UK rate hikes by the Reserve Bank of Australia may intensify. If so, the Aussie is likely to advance. The New Zealand dollar, which faced a bearish pressure after unexpectedly weak inflation data last week, rebounded slightly overnight to 0.6170. This level is located just above the 200-day moving average. Closer to the end of the Asian session, it rolled back again. At the time of preparing material for this video, the Kiwi dollar pair was trading at 0.6157 or 0.12% lower. Trading floors in New Zealand are also closed today on the occasion of the public holiday. This is why trading volumes are likely to be low. And that's all for now. Subscribe to our channel and keep close tabs on the market developments with us. See you soon.